Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, December 7th, 2020. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index down another minus 1.2% last week, taking its 1 month fall to minus 2.9% and continues to signal bearish trend on a 90-day duration. You had the euro versus the US dollar up another plus 1.3% last week and is now broaching the top end of its respective range, but it's continuing to signal bullish both a 15-day as well as on a 90-day trend duration. You had the yen versus the US dollar down minus 0.1% last week and continues to signal both bullish on a 15-day as well as a 90-day trend duration. And you have the British pound versus the US dollar up another plus 1.0% last week. And similar to the euro, is now approaching the top end of its respective range, but it's continuing to signal bullish on both the 15-day as well as on the 90-day trend duration. In terms of inflation accelerating, it was a good week last week to be long of some major inflation components. If you take a look at the 1 month price momentum, most notably in oil inflated another plus 1.6% last week and is now inflated 17.2% in the last month alone. Copper inflated another 3.1% last week and is now inflated 13.4% in the last month alone. And if you take a look at something like platinum, that's inflated 2.9% last week and continues to take its monthly gain now to 10.4%. Taking a look and touching on interest rates here, you have the U.S. 10-year yield correcting to this morning minus 3 basis points alongside this drop in both gilt and bond yields. But don't forget that the 10-year yield has broke out by another 13 basis points last week to 0.97%. And on the other side of that, taking a look at something like gold. Gold was down this morning minus 0.3%, but has since rebounded, but it's still down minus 3.5% in the last month alone, which is, again, a product of real rates, or the prospect of real rates continuing to rise. Just touching on global equities here, you take a look at some divergences in terms of long emerging market Asia versus some short Southern European countries. Most notably, you take a look at the Kospi. There's still no correction in South Korean stocks, which have gone absolutely vertical here, up another 0.5% last night and the overnight, and up 13.6% in the last month alone. India up 0.9%, Taiwan 0.9%, and Australia up 0.6% versus something like in Europe, France down minus 0.9%, Spain 0.6%, Germany down another 0.5%. Clearly seeing Southern European stocks lag beneath Asia. And as an aside here on the last note, with the US dollar now bouncing off its low, you could see, with the strong inverse correlation the dollar has with the SPYs as well as the CRB commodity index, as well as hefty implied volatility discounts right now versus 30-day realized in the Qs of minus 16%, minus 25% in the S&P, and minus 4% in the Russell. You could see a modest correction in the coming days if the dollar continues to move higher, and you're going to see that perhaps in commodities and equities tied to commodities, which may again be that opportunity that we're looking for to buy that dip, if you will, as you make that turn into Q1. And with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.